Good evening. This is Duane Lowry for the DPP Grain Desk on Monday, September 3rd. It's currently 3:08 Monday afternoon. Not sure where to start tonight. I'm not even sure what we should be looking at in terms of the outlook for the week or the outlook for tonight. I think there's going to be a hope that the markets are higher tonight. Markets performed poorly on Friday, but I think that the trade will look at weather, not find a whole lot of any significance. The market has not been connected to weather on a day-to-day basis in terms of having a direct impact on daily price movement in any recognizable way here for a few weeks. We talk about weather every single day, but I don't think there's actually any direct correlation between price action and weather. Yield ideas continue to be, very low. We're just beginning harvest to get some sense of what the yields will be. I would characterize corn yields so far, which is extremely early, and you haven't even got much into the Midwest per se. I'd say the yields are very wide-ranging. We know that we've got a lot of bad yields out there, that's for sure. But I would say that so far I've heard people comment about better than expected yields much more frequently than I think most expected. Not to say that they're great yields, but they're maybe not as bad as some expected. And we just don't know what's going to happen here as we move ahead in the harvest over the next few weeks. Ideas are pretty universal that the crop is bad, and probably very bad. In the case of corn, I think people fully expect the national yield now to be less than 120. Whether or not that's true or not, who knows? Despite the fact that people are, universal in the idea that the yields are very bad, I don't think there's a lot of confidence as to exactly what that figure is. And I think that there are starting to become some concern in the trade based on hearing these better than expected themes and yields, even though they're very poor yields. In other words, they're expecting 80 and they get 100. They're expecting 50 and they get 80. They're expecting 120 and they get 140. These better than expected yields are still poor yields, but in relationship to what was expected, I think that's starting to make people a little bit uneasy. And I think the reason they're uneasy about these kind of things is if the price action has not been able to continue upward momentum in corn. And in the case of the grain trade, I think corn has been the primary focus most of the summer in terms of what is driving market sentiment and what is driving trader expectations. The idea that we're just not going to grow enough corn, we're going to have to ration demand and cut back demand beyond what is conceivable to many. But yet the market has been stalling out, and I point to the last 7 Friday settlements have all been in a 16-cent range. That's nearly 2 months worth of trade. And out of the last 5 Fridays, Friday of last week was the lowest settlement price for the last 5 Fridays. And you're only about 6.5 cents above the lowest daily close for the last slightly more than a month period of time. That's an awful lot of longs that have been very much one-sided in trade thinking. A lot of bullish positions that have been put on. We've had USDA confirmation of poor yields. We've had a lot of private estimates of poor yields. We've been operating and trading in an environment that where virtually every day the yield ideas have continued to go down. There's never been any type of stabilization in those yield ideas or uptick in those yield ideas, and yet the market is stalling out. And we've traded as high as about 850. We're hovering, that's been a lot of time settling in the 8 to 810 zone, and I'm not sure how long the market can continue to do that without generating some profit taking and liquidation. I don't care how bullish someone is, they're still trading money. And if the market tips over here just a little bit more and gets some follow through the last week's poor performance at the end of the week, you're going to start to see some long liquidation. And I think that is a short-term risk. You might be able to very eloquently make the argument that prices have to stay high to ration demand. I think that's reasonable, but that doesn't mean we can't experience some sort of liquidation flush first. If we do, from current levels, you're talking about at least 50 to 75 cents of downside risk in corn, maybe $1.50 downside risk in beans under that type of scenario. You've got harvest just ahead of us. We've been stagnating prices here for several weeks, and I think that we're just going to have to wait and see how this bolts. Some people expect that we're going to be higher tonight based on a new month and new speculative buying energy. The way I look at it, the speculative trade is already saturated with length, and if that's not the case, then why is the market stalled for the last 6 or 7 weeks here? So I think the market has all kinds of vulnerabilities around it. I'm not sure that that means that you're going to immediately turn into some sort of downtrend and go significantly lower, but you could have a very dramatic price sell-off, so much so that any of the buyers over the last 6 weeks, 2 months are all forced to the sidelines, and you end up with a period of time where prices get pushed cheaper than they maybe should based on fundamental logic. The other thing that we have to think about, it's very difficult to gauge, what impact does $8, $8.50 futures have on the corn market, on terms of what impact does it have on demand, especially when traders and users know and fully expect that these type of tight supplies were going to last for the next 12 months. There's no relief in sight. There's not expected to be relief. The domestic user, U.S. Importers have talked about and made deals to import Brazilian corn. There's been talk about importing Canadian wheat. There's talk about maximizing domestic usage of wheat into feed rations. So there's a lot of things in motion to impact demand, but it's always very difficult to see those figures of some sort of raw data to back it up. But when you start to see price action like we've had for the last month where it stalls out, you have to wonder and seriously consider how much of this current situation has been priced into $8 corn futures. And I still think that there's a possibility, just based on historical precedents, to always over-anticipate the yield losses here, especially when you start to hear these better-than-expected themes. I can't help but wonder, is it possible that our final corn yields are going to be higher than what the trade has already got plugged in for a national yield? I don't think that's an unreasonable thing to consider, and I think it's something that limits the ability to build upon the price levels that we've been at here for the last 6 or 7 weeks. So I think we probably start higher tonight just because that seems to be the default setting of the trade. Outside markets, the trade is excited about hopes that China is going to create new stimulus activity, the hopes that the European Central Bank is going to buy bonds in a quantitative easing type of environment, printing money, so to speak. It's interesting that most of the economic data that's come out of Europe over the weekend or before has been very concerning and warning about continually declining economic activity. The economic data released in China over the weekend was not supportive, and rather than view that from some concerning aspect, the global investor sees that with enthusiasm and hopefulness that the Fed and other central banks will go on a money printing spree and quantitative easing type of strategies, and China will produce stimulus spending. That may all be true. I guess we're going to find out over the next period of time, but it seems strange that we're basically functioning on a house of cards here, and the global investor wants to be excited about adding another floor level to this house of cards through additional quantitative easing. It smells like a very treacherous period ahead to me, and I think that is also something that we have to be concerned about, is the global economic situation, which right now is not getting better, and I think Europe is the biggest drag. There's concern about China, but I think Europe is the biggest drag, and if it continues to weigh, that's going to pull down China as well. So there's a lot of things to be concerned about. There's a lot of vulnerabilities. Trade continues to be bullish, the grain markets, but I think it's important to recognize just how much has already been accomplished. For the DPP Grain Desk, this has been Duane Lowry. Thank you.